Welcome to the Deep Dive. Today we're tackling cryptocurrency, and specifically, its growing footprint on the global economy.
It's a huge topic and one that keeps evolving, it seems.
Absolutely. We've gathered a range of material for this, some foundational stuff explaining crypto for maybe newer folks, but also some deeper looks at its effects on financial systems worldwide.
Right, sources covering the whole spectrum.
And our mission today really is to cut through the hype. We want to understand the fundamental ways cryptocurrency is influencing the global economy, pinpoint the key changes, and, well, the potential hurdles too.
Exactly. Moving beyond just seeing it as, a speculative digital coin and looking at how it might be reshaping the actual economic structures we use every day.
Okay, let's start with some basics just to make sure we're all on the same page. So at its core, cryptocurrency is basically digital money.
Digital or virtual, yeah. And it's secured using cryptography.
Which is essentially complex coding, right? Making it super difficult to counterfeit or to spend the same coin twice.
Precisely. Double spending is a big no-no.
And people probably know the big names. Bitcoin, obviously, Ethereum.
Sure, those are the giants. But there are many others, like Solana, Cardano, gaining traction too.
Now, a key difference from, say, the dollar or the euro, these aren't typically controlled by governments or central banks.
That's a fundamental distinction, yes. Unlike traditional or fiat currencies, most cryptocurrencies operate on a decentralized network. No central bank, no single government pulling all the strings.
Which is a massive shift in thinking about money.
It is, and it brings both potential upsides and, let's be honest, some complexities.
And the tech making this possible is blockchain. Can you give us the quick version?
Sure. Think of blockchain as a shared public ledger, a digital record book.
Okay.
Every single crypto transaction gets recorded on it in a block and added to a chain in chronological order.
And it's public, so anyone can see it, but secure.
Exactly. It's distributed across many computers, making it incredibly hard for any one person or group to tamper with it without everyone else knowing. That transparency and security are, well, foundational.
Got it. So, secure digital money. Not centrally controlled, recorded on a public ledger.
That's the gist. Now, when you connect that foundation to the wider economy, that's where we start seeing some really interesting impacts emerge.
Right. Let's get into that. So what are some of the specific ways crypto is actually, affecting the global economy? One area often mentioned is financial inclusion.
Yes, this is a really compelling potential use case. Think about it. There are billions of people globally without access to traditional banks.
Right. Maybe they don't have the right ID or they live too far from a branch, all sorts of reasons.
Exactly. But increasingly, many of these same people do have access to a smartphone and the internet.
Ah, okay. So the phone becomes the access point.
Potentially, yes. With just a smartphone, cryptocurrency could theoretically offer a way to send, receive, store value. Basically perform financial functions without needing a bank account.
So it could open doors for people who've been sort of left out of the traditional system.
That's the hope. It raises big questions about financial empowerment, especially in places with, say, unstable national currencies or really high inflation. Crypto could offer an alternative.
Interesting. Okay, another major aspect you mentioned is decentralization. You said no central bank control. Let's unpack that a bit more.
Sure. So traditionally, central banks like the Federal Reserve in the US or the ECB in Europe have immense power. They control money supply, set interest rates, basically manage the currency.
Right, they're the central authority.
With most cryptocurrencies, that authority isn't there. It's decentralized. The network, the rules, the validation of transactions, it's spread out across potentially thousands of computers worldwide.
So no single entity is in charge.
Pretty much. Decisions are often made through community consensus mechanisms built into the code rather than by a board of governors.
And the implication there is less chance of manipulation. Or maybe avoiding inflation caused by, governments just printing more money.
That's one of the key arguments, yes. Proponents suggest decentralization can reduce the risk of politically motivated monetary policy or excessive inflation driven by a central authority creating too much money. It's a different model.
A fundamentally different model. Okay, let's shift gears to something very practical. Moving money across borders.
Yes, cross-border transactions. This is an area where the limitations of the old system are pretty clear.
Anyone who's tried to send money internationally knows it can be slow, and expensive.
Painfully slow sometimes. And the fees can stack up, involving multiple banks acting as intermediaries.
Right, whether you're a business paying a supplier overseas or just sending money home to family.
Exactly. Crypto offers a potential alternative here. Because transactions can often bypass those traditional intermediaries, they can be much faster.
Faster and cheaper.
Often, yes. Significantly lower fees in many cases. This could be a huge deal for international trade, and especially for remittances, people sending money back to their home countries.
Faster, cheaper, global payments. There sounds like a clear benefit. But we have to talk about the elephant in the room. Volatility.
We absolutely do. The price swings in crypto can be, well, dramatic, wild even.
Yeah, you see Bitcoin or others jump or drop by huge percentages in a short time. Much more than traditional currencies or stocks.
Far more volatile, generally speaking. And these swings can sometimes be triggered by things that seem almost random.
Like a tweet from a famous person or just shifts in online sentiment. I remember reading about that.
Precisely. It highlights that there's still a large speculative element involved. And this volatility creates a lot of uncertainty, not just for small investors, but increasingly for the bigger players too.
As institutions and companies start holding crypto, this volatility becomes a bigger market risk, doesn't it?
It absolutely does. It's a new kind of risk factor that global markets are still learning how to price and manage. It requires a very different risk assessment.
Okay. And given all this, this potential and this risk, how are governments reacting? It seems like there isn't one single approach.
Not at all. It's a real patchwork quilt of reactions globally. A critical point.
Give us some examples.
Well, at one extreme, you have a country like El Salvador. They actually made Bitcoin legal tender.
Wow, yeah. That was a huge move, integrating it right into their formal economy.
A very bold step, signaling strong national support. Then you look at the other end of the spectrum, like China.
Right, they've taken a much harder line.
Much more restrictive, yeah. They've implemented bans on crypto trading, mining, basically trying to clamp down on it significantly. Their focus seems more on controlling their own financial system and developing their own digital currency, the digital yuan.
So complete opposites almost. And presumably most countries are somewhere in between.
Exactly. Many are grappling with it, trying to figure out regulations. How do you protect consumers? How do you prevent illicit use? How do you foster innovation without destabilizing your financial system? It's a tough balancing act.
It really highlights that this isn't just about tech. It's deeply tangled up in economic policy, in governance.
Absolutely. And the regulatory decisions made around the world in the next few years will be incredibly influential. They'll shape the future legitimacy, the growth, maybe even the survival of certain cryptocurrencies. We need to be clear, we're just reporting these different governmental views, not endorsing any specific one.
Understood. It's crucial to just lay out the different approaches being taken. So, okay, looking ahead then, where does all this leave us?
Well, I think it's safe to say crypto is, it's moved past being just a niche experiment.
In that way.
Its influence is undeniable. It's forcing central banks to react, maybe even accelerate their own digital currency plans. It's sparking loads of innovation in financial technology or fintech.
And as we discussed, it holds that potential, at least, for bringing more people into the financial system.
That potential remains a powerful driver. It really feels like we're at a kind of crossroads.
Yeah. What are the big unanswered questions then?
The big ones. Well, will crypto or a crypto ever become a truly global currency that people use every day, like the dollar? Or will it remain more of a digital asset class, like digital gold, high risk, high reward?
Or something else entirely we haven't thought of yet?
Possibly. The final picture is still being painted. It'll depend on tech breakthroughs, those regulations we talked about, and just how widely adopted it becomes by ordinary people and big institutions.
It's definitely making everyone rethink what money is, fundamentally.
It really is. The nature of money, how it works, who controls it. These are questions crypto forces us to confront.
This has been fascinating, really getting into the nuts and bolts of its impact. Thanks for breaking it down.
My pleasure. It's a conversation that's definitely not over yet.
For sure. And for everyone listening, here's something to chew on as you go about your day. Think about that tension. The core idea of crypto is decentralization, taking power away from single authorities. But then you have the growing pressure for regulation, for control, to manage the risks. How will that push and pull shape crypto's future role in our global economy? Consider what that means not just for the big banks or governments, but for individuals like you, for businesses large and small. It's a dynamic worth watching closely.